Hello and good afternoon, Alaska. How is everyone today? Happy Cinco de Mayo, and hope you are all able to use your Uber Eats and enjoy lunch while watching this. And we are going to wait another minute or so for more people to join. And let me know what you're ordering for lunch in the Q&A box or if you have any spring break plans. With it being Cinco de Mayo, my company currently has like a little celebration going on, so I'll probably pop in after the webinar to join them. They're doing some activities and we have a taco bar. See, someone also got tacos. Awesome. Got some Mexican food, some ceviche. I know Alaska has some great seafood. I'd love to go someday. I know my grandparents have been to Ketchikan on a cruise. Someone did get fish and chips. Cool. I see a Cobb salad, burritos for the special day today, chips and salsa with some quesadilla. All right. Hot dog, sandwiches. And looks like we got a couple more people that have joined in. So before we get started, just wanted to go over some housekeeping. At the end of the presentation, I'll be following up with an email to provide the HRCI and Shroom credit. So you'll see that in a couple of hours. And if you have any questions today, I'll do my best to check the Q&A box and get back to you as soon as possible, as these questions will be saved. And if you want any further information, feel free to respond to that follow-up email. And you can also subscribe to our newsletter and YouTube channel, and I'll have those links at the end. We're also going to send a recording of this presentation you can share with your colleagues. Today, we're going to talk about Alaska nonprofits and unemployment. Before I get started, just wanted to do a quick intro of myself. My name is Janessa Ponko. I'm the Senior Member Development Representative here at 501c Services. I've been in business development for over 10 years, and I've been with 501 since July 2023. And then there's a picture of people bowling that includes me and some of our sales and marketing team members. Heidi is my manager that's in the middle. You might work with her in the future. And then we have Evan on the right. He does our web development and marketing. I'm really excited to be part of a team that's been helping nonprofits save time and money that can go towards furthering their mission. And we're based in San Jose, California. So we're in the heart of the Silicon Valley, and we're dedicated to helping nonprofits reduce expenses, unemployment expenses across the nation. And thank you again for joining to learn more about cost-effective strategies and managing unemployment in your state. We're going to provide a broad overview on how unemployment insurance works, alternatives for 501c3 nonprofits when it comes to unemployment, how reimbursing works. We're also going to use some real-life examples of nonprofits we've helped with our cost analysis, and then finally provide more information on our company 501c Services and how many of our Alaska nonprofits, we have over 40 that have benefited from our services. First of all, I wanted to start off with a little history to put unemployment in perspective. Unemployment started in the US during the 1930s following the Great Depression and New Deal, where the federal government wanted to create a safety net for workers who lost their jobs through no fault of their own. And between 1930 to 1972, 501c3 organizations, they didn't pay into unemployment benefits for separated employees. Although this saved them money from paying such taxes, employees that got laid off couldn't reap the benefits of having a safety net that for-profit companies had provided. Now, fast forward to 1972, the federal government changed the law under the Social Security Act to where nonprofits, they must pay into unemployment, but they were given different options in how they pay so that tax wouldn't be seen as an unnecessary expense for them. And unemployment is overseen on the federal level. However, each state gets to manage their own programs however they choose. So throughout the US, you'll see different taxable wage bases, tax rates, and benefit amounts. But today we're just going to cover information here in Alaska. When it comes to management, unemployment rates can be adjusted annually and are adjusted by experience. So let's say if you have a year or two of bad claims, your tax rate will increase. Most states, including Alaska, run as a risk pool. So currently, if you're paying into the state tax, you're gaining access to a pool of funds to pay for your claims. And our team is seeing a lot of nonprofits put more money into that pool than what they're getting back. And these total tax liabilities by employers, they're often greater than the claims paid, with reserves used in times of recession. And to calculate your tax liability, you multiply your taxable wage base by your employer tax rate. And in Alaska, the maximum weekly benefit amount for unemployment is starts at $370, and then the maximum number of weeks is 26 weeks. And there's also a dependence allowance of $24 per dependent that may be paid up to three dependents. And this allowance is paid in addition with that weekly benefit amount. And a dependent is defined as an unmarried child, stepchild, legally adopted child, or legal ward appointed by the court. When you multiply your maximum weekly benefit amount by the maximum number of weeks, you could claim in between like $9,620 up to $11,492 in unemployment, depending on the number of dependents you have. And as we mentioned before, the maximum weekly benefit in Alaska is $370 with a $24 per dependent allowance for up to three dependents. The federal government sets the wage base at a minimum of $7,000 and there's no maximum. Alaska's taxable wage base is currently set at $54,200 in 2026. So that means for the first $54,200 an employee earns, your organization gets taxed on that. And then the minimum tax rate is at 1% and the maximum tax rate is at 5.9%. And those are both set by the state. And then the last thing I want to note is the improper payment rate, which is at 7.57%. This overpayment equates to over $14 million in overpayments to former employees who are collecting unemployment from the past 3 years. And we get this information from the Department of Labor. You can see Alaska is one of the many states that's less than 10%. Although this rate may seem low, this is money that could have been saved by organizations if they had audited more accurately. This is important to know as we really encourage you to look over your claims to make sure that you're not overpaying or make sure that you're not overpaying for anybody's claims. And here at 501c Services, we help organizations monitor this. And if you currently are managing on your own, you want to make sure that you're properly charged for a former employee's weekly benefit amount. And there are three different alternatives for unemployment. One is that you pay that state tax that we mentioned earlier, that includes the tax rate that's set by the state and taxable wages. And another option is that you can self-insure or reimburse for your unemployment, where you're just paying dollar per dollar for your unemployment claims. So you're basically only paying for the benefits issued. And then the last option is kind of a hybrid of both, where you buy insurance that offers a savings of reimbursing while also providing that safety net. Just let you know, reimbursing is not for everyone. The qualifications that we look at for considering reimbursing is that an organization must be a 501c3 nonprofit. We recommend a gross annual payroll of $1 million or more because typically if your payroll is under $1 million, especially significantly less than that amount, what you're paying into the state tax pool is probably pretty minimal, so you might not see much significant savings by opting out. However, there are some cases where you could see potential savings. So we're happy to look at your numbers, even if you're just slightly less than $1 million. And then we also look at a positive audit from the past 3 years. So that means in order for reimbursing to benefit you, we try to evaluate if what you paid each year in taxes exceeds what you're paying in actual claims. We also want to make sure that there isn't any major disruption in funding for the next 24 months. So we do recommend to stay with the state tax system if you know if you might have anything from layoffs, reduction in workforce, losing funds, or closing programs where your tax rates may go up with experience. And then you'll probably want to wait once those claims decrease. What it means to reimburse is that your tax rate turns to 0%, and then the state will bill you only for unemployment claims that you receive over the quarter. It's a great way for nonprofits to save money and be a better steward of donor dollars. The process is seamless for separate employees. No matter how your employee gets separated, they'll still go through the same process for your unemployment department, where the state will determine their benefit amount based on the base period pay. The only change is how that quarterly bill is calculated. So instead of the state unemployment insurance tax, you're now only responsible for charges your organization incurs. And we work with 1,500 nonprofits, and we have over 40 in the state of Alaska. So you're probably wondering what motivates them to reimburse. In most cases, reimbursing saves money. On average, savings can be anywhere from 20 to 40% compared to paying into the state tax system. And this is really the driver for most organizations to switch. Reimbursing also eliminates any concern of changes in the state tax, such as those tax hikes that you can't control. You become a better steward of donor dollars as you're just paying for your actual claims and putting money into that state pool. And because unemployment is managed by the federal government, big picture, reimbursing is allowed in all 50 states. It's best with employers with over $1 million in payroll and at least 15 or more full-time employees. If you're on the borderline, we can still certainly talk, as sometimes there may be circumstances where we can consider reimbursing for your organization. And if you're smaller and reimbursing already, we can still consider you for our services and how we can help you reduce your risk. And there are a couple different strategies for reimbursing. The first is to manage your own program. This can be risky with the highs and lows of unemployment, and you really need to make sure that you have budget for these claims and that your team is diligent with managing, auditing, protesting, and paying claims to reduce risk and prevent overpaying. The other option is to outsource, like using 501c services to help with the administrative work and managing the challenges that can come with unemployment claims. And then we also have a trust where you can put money aside. The third option is to purchase insurance. At 501, we do offer insurance programs. They're a little bit more expensive than the trust and offer different levels of protection. And I do want to talk about how the state tax is calculated. Like I mentioned earlier, I'll show some real cost assessments we've done in the past. So the taxable wage base is customized by each state. Currently for Alaska, that taxable wage base is at $54,200. All employers in the state pay the same taxable wage base. It represents that first $54,200 of an employee's earnings. There's no maximum and can increase. So the taxable wage base can increase or decrease by any amount each year. And the tax rate is set annually by the state and is based on experience. So to calculate your contribution amount, you multiply the taxable wage base by the tax rate. So for Alaska, it's at $54,200 times a range of 1 to 5.9%. This amount means that if each employee makes over $54,200, a company is paying in between 54.2 to $3,197.8 per employee in unemployment. And here is a sample of an Alaska contribution notice. It includes some of the information we need for a cost analysis for your organization. This notice includes your employer tax rate that's highlighted at the bottom, and also the latest year's worth of taxable payroll, so let's see, it has the taxable payroll. So if you wanted to look at your latest year's worth of taxable payroll, you add the last 4 years of quarterly payrolls together. And typically, we also like to look at a 3-year average of claims, and we would have your organization sign an authorization form so that we can contact the state of Alaska that will provide your claims history. In this example, we calculated that their estimated state tax, or SUI, would be over $46,000. And based on the last 3 years, the organization paid $27,000 in claims. So overall, this organization had an overpayment of around $19,000. So we suggested that this organization should consider reimbursing, and eventually they did become part of our Alaska members. Also, there's no need to understand everything on this document. We're happy to look over your numbers and see where you may potentially save. And our next 2 slides will show more examples of organizations with large overpayments who transitioned to reimbursing and eventually became part of our trust. This is our first example of a human services nonprofit. The taxable payroll was just shy of $1 million, tax rate 4.7%, estimated claims only about $200 per year. And also in this case, we look at a 3-year average of claims. So they were overpaying $45,000 a year. And think of what you can do with an additional $45,000 for your organization. This next example, the taxable payroll is around $700,000, tax rate 3.38%, estimated annual claims around $5,900, estimated unemployment taxes were around $24,000. So they overpaid around $18,000. Now, a little more information about 501c services. We were founded in 1982 by a former UCP executive. He was looking at ways to save money for his organization. So he came up with the idea of starting a trust. He created the first kind of grantor trust called the Joint Unemployment Compensation Trust. It eventually became what is now known as 501c services, and 501c agencies trust is what our trust is called. And we started at about 25 members here in San Jose, and we've now grown to helping over 3,000 nonprofits in various ways. In 2016, the founder sold the company back to his employees, so we're now 100% employee owned. From our receptionist to the CEO, every member is committed to our company and serving our members. And our services are valued tremendously, with our members having, or with our company having over a 98% retention rate. And these are a couple of testimonials our members have shared, and you can go back to these later as I'll send the slides after the presentation. And here's a clip from our 40th anniversary celebration a few years ago. It includes testimonials from Anika Lund and Mike Hoffman from Start Early, Mary Sue and Michael Eady from CISC, Sandy Leota and Chris Marshall of Baltimore Center Stage, and Phyllis Austin and Jason Penniger from Boys and Girls Club of America.
What makes me passionate about working for a non-for-profit organization is because I knew I always wanted to work for a mission-driven organization.
Our mission is to work with immigrant communities so that they can achieve the American dream.
501 helps focus our service to the community by giving us more time.
501 helps us focus on serving our communities by providing services directly to our HR professionals.
The biggest benefit for working with 501 is really the transparency and ability to forecast our costs when it comes to our unemployment benefits.
They also keep our cash flow steady through claims that are sound and take a lot of the admin burden off of us so we can just stay on autopilot.
We're very grateful for all the support you provided over the last 4 decades, and we wish you continued success in the future.
Congratulations, 501, on your 40th anniversary. It's been a pleasure serving with you for the last 24 years.
And like I said before, we work with over 40 Alaska nonprofits, and this is a quick snapshot of a few nonprofits here in the state that are members. And as you heard them say in the clip, our members appreciate how we save them time and money and also relieve those administrative burdens. The first way we help nonprofits is through claims management. Our team will help you manage, audit, protest claims. So if you ever have to protest a claim, we offer unlimited access to hearing reps. And our team has an 82% protest win rate in the state of Alaska. You get a dedicated claims manager once you become a member of the trust. And all of your claims will go through this online portal where you'll get notified that a claim has been filed. So you'll go into the portal to respond to the questions. If you ever have to go on PTO or forget to delegate these kinds of tasks, it shouldn't be an issue for a claim that doesn't get responded to in several days. It gets escalated and handled. A big part of our claims management is that our team doesn't want your organization to overpay or get hit by those error rates in Alaska, so we can audit those charges for you or prevent you from paying a claim if someone gets terminated. And we want to make sure that you're managing these claims and also have enough support to do so. Our HR services include 3 components. We offer access to unlimited HR consultations, and we're made up of a small dedicated team that can answer any of your HR related questions. So if you ever have an ongoing issue, you can develop rapport with the person who can support you and manage any of your questions. Our HR services also have trainings throughout the year that are HRCI and SHRM certified. There's also an online knowledge library with these services. And with the $370 to up to $442 maximum weekly benefits in the state of Alaska, our goal is to help you keep that cost as low as possible. If you ever have to lay someone off, we have our reemployment tool. It offers packages which can range from online coaching, interview techniques, and resume writing. And on average, individuals or former employees that have used this tool have found a job 4 weeks faster compared to those that didn't use the tool. It's never fun to let someone go, but at least you can offer them the safety net and resources to help them secure a new job faster, which in return can also save your organization money. And then we have the protection part. It's the insurance part of our program. Most of our members take our stop loss protection that helps them during catastrophic claims. Other than the catastrophic claims for managing the highs and lows of unemployment, we have the trust account. This is a reserve account owned by your organization where you can put money aside and pay for claims. So I hope this sparked your interest, and maybe some of you may want to manage your unemployment through us as a reimbursing employer. If you want to see if your organization has any potential savings, what I would need from you is your recent 4 quarters of 941s or estimated payroll from 2024 to 2025 as a reimburser. If you're paying into the state tax system, I would need a copy of your recent 2026 tax rate notice, so your contribution rate notice, and a signed authorization form that we can collect so that we can collect your claims history. And I did see a few questions. I can go over them. Let's see. Does it cost anything for these services? Yes, we have our administrative fees. The pricing is based on your gross annual payroll. And that's also why we collect like your recent 4 quarters of 941s. And then our service fees will also be included in that cost assessment. We're already self-insuring and over $1 million in payroll. Would it be worth it to join your trust or just stay self-insured for our size? And is the trust for smaller organizations? So we do have members that can vary. Some of our members have a payroll less than, so under $1 million, and then all the way up to $100 million. And our services are here to help mitigate the risk of reimbursing with our services like claims management. We also have the reserve account to help you budget for the costs and also manage those highs and lows of unemployment. And we also have stop loss protection if you have a catastrophic claim. We're happy to provide you with a quote to see how our pricing is. And again, we would need your recent 4 quarters of 941s. And the next question, we're also reimbursing, or this is another company that's reimbursing. Why is unemployment allowed for employees that have stolen for the company? So we would need a little bit more context for this scenario, so it is difficult to provide a definitive answer. Typically, unemployment benefits are given to former employees who lost their job through no fault of their own. So if an employee gets terminated, they shouldn't receive unemployment benefits. That terminated employee could apply for benefits. It's up to you as the employer to protest. It's also possible that the former employee got another job and also lost that job through no fault of their own. And how that employee or how you may be responsible for that employee's unemployment is they base like the last 4 quarters of which they worked. And if they were working with you in those last 4 quarters, then you may be responsible for a part of that claim. And our services can help you manage your claims, also protest if needed. And we also help organizations reduce their liability. And on average, with the state of Alaska, we have an 82% protest win rate. And why are some claims approved when a staff resigns? So without more information, this is also, we can't provide a definitive answer. We would need more context in the scenario. If someone leaves your organization, gets another job, and gets laid off, kind of like the last question, if they leave your job for a new job and that new job actually lays them off, and if you're part of that base period, or they work with you during that base period, you could be responsible for a portion of their unemployment. And there's also other factors for unemployment that can allow a person to collect unemployment even if they resign. And sometimes it doesn't seem fair. Our services can help make sure that you don't pay for any unnecessary claims, and we can also help you understand why some claims are approved. And looks like I don't have any other questions so far. I will stay on for another minute or so. If you have any questions, this is my contact information. I will be sending the Shroom and HRCI credits in a few hours, and also a copy of the slides. You'll get a recording of the presentation in a few hours as well. And if you have any questions, feel free to also reply to the follow-up email. And we also have our YouTube channel if you want to check out more information, and our newsletter. All right, perfect. Thank you so much, and hope everyone has a great week, and happy Cinco de Mayo.